as we saw, the Dow was up strong today, but it didn't actually do a reversal signal. If you'll note, it opened slightly higher than where it closed yesterday, and it closed slightly higher where it opened yesterday. So it's not a bullish engulfing signal, it's not a bullish harami, it's an up day. Now that still implies there could be a bounce in here because of the strength. However, note that the stochastics are not quite in the oversold area. This would still kind of lead us to the point that as long as we're still below the T line without a candlestick reversal signal, we should be remaining in a downtrend. And note how the characteristic of the trading was in the NASDAQ today. The NASDAQ opened higher, but it traded down, or it finished down. Even though it was up on the day, there was selling going on after the open. So these type of details can be easily seen in candlestick charting much more clearly than any other technical service. Knowing that the probabilities are still in your favor, the markets are heading down, even on days we recommended shorting GWPH, it started off opening and trading positive, so it didn't look real good, except we still keep an eye on it, because as long as the market indexes do not have a strong reversal, this may just be bobbing in the morning and then selling off in the afternoon, which it did. We also recommended shorting TKMR on the basis that if it traded lower today, it would be doing a doji sandwich, which is still a very strong sell signal, which would make the 200-day moving average the next likely target. Well, it traded up a little bit today and then started coming back down through the open, which is an excellent entry point using candlestick charts, and had a big day to the downside. So even though the markets were up, the charts that were telling us they were still weak, still were acting weak, obviously. This same scenario was in our recommendation to go short DANG. Even though it opened positive, makes this a very simple entry. We were ready to go short on weakness. Opening positive and coming back down through the previous day's close also is creating another dark candle and telling us that they aren't taking it back up. The analysis of this one was very simple. We had a big bearish engulfing signal right in this trend channel telling us that we're probably still heading down, and more than likely they're heading all the way back to the 200-day moving average before you see some buy signals. So this was recommended to go short with the anticipation they could bring it all the way down to this level. And this does not negate being able to identify chart patterns that are coming out of a breakout area. Notice the fry pan bottom and on a recommendation on ORMP, and it opened positive above the 50. So it not only opened above the 50, but was starting to break out through this area, giving us the probabilities of a very strong move to the upside. Knowing what should happen based upon candlestick signals and the aftermath or the results of candlestick signals and patterns continues to allow candlestick investors to be in the right trades at the right time. That'll be it. We'll see you in the chat rooms.